All right, welcome everybody. Wall Street Jesus here, Saturday Sweep Series. Say hello to everybody out there. We're open to the public today. Again, those of you who are new, members of the Steam Room private Twitter and the trading room, we do this every Saturday, same time, same place, and go over the same exact stuff for the most part. Some of these webinars are more, there's a lot more detail, a lot more information to cover, and some, uh, there's really not much to talk about, but we go over some of the things we saw the prior week, try to get a game plan for the week coming, and that's it. All right. And in my opinion, I think especially if, and I know there's a lot of members on this webinar again today, obviously, but if you are, if you have another job, trading is not completely full time, whether you want it to be or not. I think these Saturday webinars are huge. I know for me, I see a lot of things when I just sit back with a cup of coffee on a Saturday that I may have overlooked or missed during the week. So I really like to pay attention to not just the flow, even more so sentiment and what we're seeing, and then get an idea of what to look for in the coming week. Okay, and this week, I mean, it's a big week. No matter how you slice it, it may end up not being a big event per se. You see what happened with Microsoft. They pretty much factored in every little bit of good news you could possibly find on the name. You had a pop, then a little bit of selling. So it may not be price action wise a big week, but this is a big week for me for one reason. Okay. One, we just came out of a week where it was really difficult. One, you had a ton of earnings positioning out there. All right. So, all kidding aside, I think like 99.9% of the options flow out there is completely useless in a week like last week. Not only because of earnings, but because you have July monthly expiration, a big expiration, and we've spoke about this many times in the past when we've run into this, spot in time where any big positions out there, okay, especially on the long side, but both calls and puts, okay, but all the flow we've been seeing in some of these bigger names, a lot of them, if you remember, were July monthlies and they're expiring. So if these funds, syndicates, players, groups, they want to keep exposure on the bullish side in a lot of these names, they have to replace those positions that are expiring. Okay, so it can be extremely misleading. Okay, and you see a lot on social media too, where you see some huge block come in, and a lot of people who are running off scans and stuff like that think it's a size big bet on a hot name, but in reality, could be that that player is actually taking off some bullish exposure, putting on less. He had a bigger July position. He locked in profit, and he took some of that money and opened up some August, September, October calls. All right, so that's why it becomes extremely misleading and confusing this week. So I told you guys what I like to do and have done throughout my career. When I need to rack my brain, when I need to do more than I would like to do to try to figure out if flow is clean, I just simply like to take a step back and do nothing. So in other words, if I know that a lot of this earnings positioning and a lot of this July replacement stuff out there is not clean, rather than try to, guess which may be clean out there, I just rather sit on my hands and wait for, the skies to clear. All right. And even more so, again, it comes back to the sentiment stuff we look at. Even more so when I have sentiment against me, it gives me just another reason, and just another aspect of my trading world that's going to keep me in check and keep me disciplined and not try to do too much, in a market that's already had a move and the flow's not clean. All right. And a lot of you guys on private Twitter in the room, I do that post-market quick write-up at the end of the day. A lot of you guys probably have seen throughout the week where I mentioned, flow against us, right? We don't have any clear idea of what's going on within the options flow. Sentiment against us, earnings season, off a rally. There was nothing we could really lean on or get excited about going into last week. Okay. And, look, right? Did the market really do that much? A lot of people I see out there got chopped up, got thrown around, chasing green, stopping out into red. And that's what usually happens, at least for me, especially throughout my career, when I try to trade in that environment where I have nothing to really be confident about. All right. So that's what I'm most excited about as last week is gone now. Okay. So we got that July stuff out of the picture. We got some earnings out of the picture, right? Banks have reported some. We got a lot to go. And this week, we got some big time earnings that we're going to get through little by little. And the flow is just going to become that much more clearer as we move on here. Okay. And that's another thing. We're looking hopefully for some rotation unless they really take some of these hot names in. Okay. Which is possible. We've seen it time and time again. But the only way we're going to know if that rotation is legit is if we need to get through a big chunk of the bigger earnings out there to get an idea. All right. So, the game plan coming into this last week, was to really be selective, be nimble, stay light. Okay. Try not to get too cute on the long side or the short side. Okay. Because even as sentiment was hot, it was hard to really see them take this market down and the leaders down when you have earnings right around the corner. Why would they sell these names harder? Why would these names sell hard without seeing some buying come in when they're just going to report in a couple of days? All right, so that's why we couldn't get too bullish or bearish. It was more of a just sit back and do nothing mode, play around to enjoy yourself, but try not to lose much money. That was pretty much the strategy going into last week. Okay, things now are a little bit better going into this week. One, like I said, July out the window, so we don't have to worry about that repositioning. But two, believe it or not, and I almost get this from a lot of people in like excuse my French, but a wise ass crack manner. Sentiment actually cooled down last week. Okay, we're not flashing buy signals, but if you remember, it was a little too hot last week. So that tells us risk reward wise, just not worth it on the long side. Okay. It also tells us we're more likely to make a wrong or foolish decision on the bullish side based off emotion, based off FOMO, than based off any signals we have confidence in. That's what sentiment tells us. Okay. And even though this market really didn't do much, right, as far as weakness is concerned, you had headlines out there. Trump did his thing, right? Tariffs. Now there's a potential currency war, and you could see it starting to fester, right? Where there was no bearish thing in sight going into last week. Now you could see it. You could see it starting to fester out there, especially amongst. You go on Twitter, you see it, CNBC amongst the noise out there. Okay, a lot of people on Twitter who were just uber bullish going into last week now are, a little hesitant behind their long ideas. So that's a good thing. And we're seeing it in the sentiment readings that we look at religiously. We were at overheated levels, meaning players were just too bullish out there. and now we're back around neutral level. So it washed out a lot of that excitement. And it needs to do that. It needs to do that because throughout my career, very little, I can count on probably one hand that I've seen times where you get that extreme bullish sentiment and the market just has another huge leg higher. You know what I mean? Another huge rally. You get these instances we spoke about, like in January, where we had that. Okay, the whole second half of this leg in January rally, we talked about that a lot, you guys know, was all through extreme bullish sentiment, but ultimately it leads to something bigger like this on the downside. Okay, so these little pauses, especially when there's, that headline news, that noise around it, they can help out. They can help out. And then what you see is, whether it's off earnings or some Trump tweet or currencies crashing, you get that whoosh. And that's where we're looking to start put some money to work on the long side again. That's where things become a lot more interesting. So we'll see if that plays out. Or you can have, you've seen it. Go back and look. I'm not a big chart guy. This is the way I use charts. I just go back and look at other instances in which we've had similar setups and, how the market played out. You get these little consolidation, downward bias pullbacks, and when everybody's fearful, everybody's caught on the long side. That's where you want to start looking around in names you were interested and were disciplined enough to hold back on because sentiment was too hot. All right, so that's what I'm kind of feeling better about. Well, those of you members know what I'm talking about. I was kind of not negged out, but I had nothing to be excited about last week on the webinar. This week I'm feeling a lot better because some of the stuff I was concerned about has alleviated a bit. All right, let's jump into quickly just the sentiment. I posted on private Twitter, so those of you who have access to private Twitter can look at it again if you like, and save it for the start of the week. So here's a basic rundown of a lot of these sentiment indicators I look at over the weekend. All right, up here on the top, this is the stuff I look at for the most part every single day, except for the bottom two here. Okay, so the squeezometer, a lot of you guys have seen that. Excuse me. That's a measure of intraday option sentiment in what I feel is retail players, retail action. Okay, so we are actually under the neutral mark, 50 being the neutral mark. We are under that mark. We were hot late last week. Okay, short-term trader sentiment, same, it's very similar. It's just measured at the end of the day rather than moving around intraday. We don't get a reading intraday. Same spot, usually lines up pretty close. Tech, that was a little hotter than the rest of the market. Now it's kind of evened out, which is interesting. Tech there was a lot more bulls in tech as opposed to the other stuff out there. Not the case, or not as much anymore. Okay, equity put to call. A lot of you guys look at that. Simple volume indicator on the equity side, measuring puts versus calls. We were getting down a little bit too low for my liking. Friday started to creep up a little bit, back at least with a 6 handle. Total put to call, that too was getting a bit concerning. You like to see that thing, over 1 or at least a 9 in front of the number. We flashed, I think, an 8 on, was it Thursday? So a little bit better there. These two, weekly put buying, that's every week it updates. I didn't get that yet. And tweets are just, social media, Twitter. They were a bit too bullish. Now they're back to neutral. All right. Some of the other things, and again, this is the stuff I look at each and every day religiously. Okay. If you're an active trader, day trader, swing trader that looking to flip, within days, or even if you're an intermediate term trader, I think this is the stuff you really pay attention to because it's been solid as far as entries, maybe looking to take some profit, holding back on putting on any more risk exposure on the long side, etc. This is more over here, this second column of, I guess I would say, an intermediate time frame. Okay, they could stay at bullish extreme or bearish extreme for a while. You won't see any market reaction. Okay, but a lot of the bigger moves over an intermediate term time frame will come out of these. Okay, so the daily sentiment index, you guys see me post that a lot on Twitter. Those of you who are members, we talk about it a lot. A lot of professionals use it. You got the S&P 500 up over 70. A lot of people have a different definition of bullish extreme. Me, I look at over 80 and above as sirens. Okay, 70, you would like it lower. So that's where we ended on NASDAQ and DSI, 72. Fear Greed Index, 0.64, a little bit above neutral. AIM, we spoke about that. That's that survey sentiment reading. Every market bottom has had a bullish signal. Believe it or not, that is still at or near bullish territory. Okay. And then the Smart Money Index, pretty neutral. So, and we'll talk about the sectors quickly in a minute, but you can see here, for the most part, especially the key stuff we look at, neutral. Okay. And like I said, last week, a lot of these things were really hot, really hot. So that's a big improvement. You don't want to overreact. It's not neutral is neutral. It's basically not giving us a signal on anything. So you don't want to overreact and try to make something out of it that's not there. Okay, but I feel a lot better that it's here and we're closer. Now we get a legitimate wash off a headline, and we got to be looking for some decent action into that wash for longs. Okay, that's the difference. Where last week, the end of the week, there was some weakness, but I wasn't looking, I wasn't getting too excited because we had a long way to go. We were too hot. All right, here's some of the sectors. There's not really, here's the one thing that was a little frustrating that I've been looking at last week. There's not that many individual sectors that are lined up nicely here. Okay, if you guys remember, the last time we really discussed this, I think it was on one of those during the week webinars we do on a Tuesday. The financials going into earnings season were lined up, bullish sentiment, but you had earnings. Okay, the industrials, if you remember, nobody wanted those things. They had some, decent signals on the sentiment front. Tech wasn't too bad, then got cooked. So now you got nothing there. You got actually biotech hot, industrials hot, meaning too many bulls there now, believe it or not. Some of the consumer staple names, if you remember, they were lined up with a bullish signal. Now they're a bit hot. Healthcare hot. The only thing that's actually flashing bullish signals is gold. Okay, but again, the problem with gold is that it's kind of, I don't know what the hell gold is anymore, but it's anti-market, right? There's limited times we've seen where gold and the market can rally together. It's possible, but if you're going to make a play on gold just based on sentiment, and it's not kind of hedging out some long exposure in equities or something, you're kind of betting against equities, in my opinion. So that's the tricky part with gold, but that's the only thing right now flashing a bullish signal as far as individual sectors are concerned. And it's actually a commodity, right? Materials neutral, so not bad. Energy was too hot. We had a nice wash there. If you guys remember, we were talking about energy. Remember? So now look. So that you had a nice wash there. And you can see up here that this is sentiment too. So you can see bullish sentiment going into this top here. Then you had a wash. So this thing is back in decent shape. Okay, a lot better than where we were. Oops. What else do we have? So, retail was another one. Was cooked, right? Too many bulls there, had a huge rally. So that had a little bit of a pull back to neutral. So that's basically it. That's basically, there's not much more. I wish we had a couple of groups that were similar to gold. We could look for a rotation there, kind of like we had. Remember the staples, the Campbell Soup, the Clorox, all that stuff, where we could look for some flow there as far as rotation out of some hot stuff, and it lined up perfectly. The banks I was hoping for, but what happened with the banks, they had that reaction off earnings. I was hoping they'd stay weak post earnings. That would have been a great spot for rotation. All right. So anybody have any questions on, I see a couple of you guys are asking questions. I haven't even taken a peek because I was looking over here, but anybody have any questions as far as any of the sentiment stuff we just went over? Sentiment in the home builders, interesting. That was, I was going to post that on there. I don't know why I didn't. It's kind of neutralish there too. There's nothing, Stephen. I think we were looking at it together last week at times. There's nothing, a couple of this stuff lining up was in no man's land, nothing really flashing bullish signals, put it that way. No. Well, a lot of people look at it differently, sector sentiment. Me, Ani, I'm just a straight up contrarian when it comes to this stuff. Okay, because I'm not just trading off the sentiment alone. I want to see flow. Yeah, I want to see sweeper activity start to hit those names, and then it's kind of giving me a heads up that the momentum there is about to shift. All right, but you want to see, I see what you're asking. No, under neutral. I'm sorry. Above neutral is hot, if that's what you're asking. Under neutral is ideal. I got it now. I didn't realize what you were asking. Yeah, so you want to see under neutral. So meaning that technology financials, they've gone from bullish setups to now crossed above neutral, getting to overheated zone. Adam saying, as someone whose investment horizons is short as 24 hours and up to maybe 1 to 2 weeks, what kind of indicators and sentiment flow? These right here. Honestly, the squeezometer and this ST trader sentiment is pretty much all you need to look at. The other stuff is just nice to have an idea where they are. Like, I give you an example. For me, for the most part, I'm day trading. A lot of the swing trades I take are a lot more selective, and I like to have some decent time behind them. So I'm not trying to be too tactical on the swing side. I look to day trade off the short-term momentum, but I like to know, like, for example, let's say I wanted to swing biotech. Okay, let's say I see some action into biotech. All right. I like to know that biotech as a group is too hot, because even though there's some flow there, it might be more inclined to see some selling, see some profit taking, less short squeezing. You know what I mean? So I'd like to have an idea where some of the other stuff is at on a sentiment basis. But that's me. That's me. because honestly, I'm fascinated. I mean, sentiment fascinates me in markets. That's what, in my opinion, I think that's what rules markets out there, right? You hear Lucci talk about emotions, right? He don't shut up about that, how it's the most important thing out there. I think it's huge. All right, so I like to have an idea of where everything's at. But if you're a tactical trader, short-term trader, like you just mentioned, these are the squeezometer and the ST trader sentiment is pretty much gold for you. Okay, because that's where you're going to get the short-term squeezes. You know, if you were to tell me if you were a longer-term player, getting hung up on the stuff I'm telling you to pay attention to sometimes can get you into trouble. I'll give you a quick example so you know what the hell I'm talking about. The squeezometer and the short-term trader sentiment flashes green signals telling us that bears are getting a little too excited, right? The probability of a squeeze is high now. So we're looking for a long to take advantage of that. If you're an intermediate trader, intermediate term or longer term trader, what can happen is the squeeze can happen that day or the very next day and be a decent sized squeeze, but that could be it. You know what I mean? And if you're a longer term trader, you can be like, all right, you know, these things are flashing bullish signals. I like the spot. I'm going to put on a long. And you're looking for, let's say, a bigger move, especially over the time frame, and it just happens in a matter of a day or two, and then gives it all back. All right, so that's what I wanted to stress. But these two are money, in my opinion, for short-term trading. Money. I think Ani, who's in the room, and I know Ani forever now, has just, I think he put the best label on it. It's a compass. You know, it's a market compass. It gives you an idea. You know, when you feel that emotion in your body, in your bones, and the sentiment is telling you not to feel that way, you know, it almost feels like you're doing something right. You know you're doing something right. You know, it's so hard for you to pull the trigger there. But for me, you know, I've looked at this stuff so long that I know when it's hard for me to pull the trigger at a market spot, I'm usually in good shape there. You know, I'm usually in good shape. It's the opposite of that, where you just want to buy everything because you think the market can't stop going higher. There's never going to be a pullback again that bites you in the ass. Sean's asking, does the squeezometer meter refer to the overall market, or is it broken down at all? That's another great question, Sean, because this is another issue, okay, where especially in rotation type markets where you see a lot of rotation, you don't want to get too hung up on the sentiment readings as buy sell signals. Okay, you really don't, because I'll tell you why. And Sean brings up a good point. Even though what did I do here? Even though the squeezometer, like Sean's saying, is flashing a bullish signal, meaning people are retail crowd is leaning too much on the bearish side. They're bearish. So we want to be bullish. Okay. You can't really apply that to everything out there. Right? You certainly can't apply that to each and every individual name out there, because we've seen time and time again that the market can squeeze, the market can bounce, but a particular sector doesn't. Right? Or you see a bounce more so in the NASDAQ than in SPY, or you know what I mean? So Sean brings up a great point. And that's where, you know, a lot of the sentiment stuff could get tricky in rotation, you know, that divergence out there in markets. That's why it works so well, Sean. Those indicators work so well in a type of environment we had in February. believe it or not, where we had that panic attack wash because the whole entire market is correlated, right? If the market's up, everything bounces that day. The market's bleeding to death, they take everything lower that day. That's where those indicators, they feel like they work the best because you can apply it to everything because everything's so correlated. Here's another example, Sean, like what you just mentioned. Okay, we got overheated signals on a lot of these indicators last week. Okay, midweek to the end of the week, we finally cooled off Friday. We were overheated, but you had names that continued higher, right? Well, maybe that's a little late in the week, but you know the point I'm trying to make. You had names that still continued higher. So that's where, again, you don't want to get too cute with these things. And the way Ani, you put that compass label on it, that's the best way to explain it. It's just giving you an idea of discipline, where you should be looking to put on risk long exposure and where you should be chilling out. And you try not to get too tied up in, oh shit, you see the sentiment indicator, it was too hot and I didn't buy XYZ and it still went higher. You can't look at this game like that. Because let's say 7 out of 10 times that XYZ is going to be down. And rather than look at the 1 or 2 times they may have bucked the trend, and it's very possible, you don't get too wrapped up into it. So yeah, I would use it more for the overall market, but as traders, I would just look at it for risk, if that makes sense. You know what I mean? Does that make sense? Like, in other words, when this thing is up into the high 60s, you don't even need 80, okay? That's my point. When this thing's up over 65-ish, me personally, I don't want to put on too much additional long exposure. Okay? I'm usually trimming down, rolling out, DK. Oh, you guys, this was again the member only webinar, but DK, remember what we were talking about last week? A good time to roll out positions. You were saying you were going out further. That's what we like to do. Like, that's what DK, who looks at these things and knows these things probably as well as I do, that's how we use it. Okay, sentiment getting a little too hot here. Anything I like, I'm going to roll out for more time. So that's the way to use it. And then let's say, like, for example, recently you trimmed some profits, you rolled out, you raised some cash. Now you're waiting for this thing to get into the 30s. And now you want to start paying more attention to this sweeper activity that's coming in on the call side. Some names you were hoping to pull back, and they are. So, like, again, I hate to sound like a broken record, but it just nailed it. It's a compass. It's not. You could probably trade successfully using it as buy and sell signals, but you're relying too much on yourself as a trader, and you may be okay with that. I'm not. Okay? If you're that good of a trader, then you could probably do it and do it really successfully. But I would use it more as a guide and more for risk, a meter of risk, if that makes sense. Okay, what other, but some great questions here. Are these indicators in the page we're looking at explained in your Wise Guys Revealed course? No, Mary, it's not. We are going, I was looking to do, if I can find the time, obviously, I was looking to do some sort of like revamped Wise Guys Revealed course. The Wise Guys Revealed course was more of flow and how Lucci and I basically would trade off the flow, and sort of goes into detail, examples, explanations of that. But it's focused just off the flow. We didn't dive into. Actually, I think there's some psychology in there that Lucci threw in there as just a bonus, but we didn't get into sentiment as far as indicators much. Yeah, and that's DK's making a point. You know, there are traders out there, and again, that's not what I do, but DK does it. You know, and DK has been trading, so I'm not going to tell DK what to do. But DK is saying if this thing is up in the overheated zone, he's looking at overheated names as a part where momentum may be fading out as a possible play on the put side. I mean, if you're going to play puts anyway, right? That's the way you would use it. I mean, it's that simple. Me personally, in bull markets, and we're in a bull market, guys, okay? In bull markets, the way I use it is a measure of risk of my long exposure. That's simple. Okay, when this is here, I say to myself, when this is approaching the hot zone, I say to myself, if this market pulls right now and catches these bulls, am I okay with what I'm holding right now getting whacked? Am I okay with that? Because if I'm not, whatever I'm not okay with, I better roll out or trim right now. That's the way I look at it. Okay. And then, like I said, when this thing is here, this is where I want to make sure and that's another reason why I don't really go on the put side or do any of that. I want to make sure when this thing gets close to green, I got the ammo to do some buying on stuff I like on the long side. And guys, this is, if you take, again, I'm no technician, and this is what I use charts for the most part. If you look at just the ebb and flow of the markets, look, right? Squeeze, tops out, pull, rally, breather, pull back, rally, pull back. You understand? So that's why those indicators are like a compass. They're basically getting you to start looking on the pulls, okay, and to take profits when rallies get stretched. That's what they're gearing you up to do. It may not catch the exact bottom or the exact top, but you know, more than not, you're going to be in that vicinity, right? You're going to be in that vicinity. You're going to lighten up risk over here, maybe, and not at the tippy top, right? And you may be looking to start buying over here a little bit. The market goes somewhat lower after that, but then the rally comes again. And the thing is like you're still looking to buy as things are setting up. So that's basically what this stuff does. You know, especially for me. No, I'm not using the marks for timing. Again, I have a good buddy of mine who I know since the beginning of time. I've traded with. He's a lot better trader than I am. I'm not ashamed to admit it. And he uses it with sweeper activity and sentiment. So he basically, you guys know, he's been stressing to me how efficient it works and how it lines up with this other stuff we look at. And I started to keep an eye on it, and it does line up, but you know, I'm not trading off the mark only. I'll tell you that much. You know, but it does line up. Like, look, again, I don't know the details of the mark, so I don't even want to open that can of worms. Okay, so I'm just going off based on what he told me, and what he's telling me is you usually see these nines pop up when sentiment gets a bit too hot on the upside, and these nines on the downside when bears are a little too crazy. And a lot of times they line up. And when you see sweepers come into those spots, the odds of it being successful goes up even more. You know what I mean? Raj, there's audio. I've been talking for an hour here, and I'm talking back and forth with people, so it's on your end. Well, if he can't hear me, who am I talking to now? So what are the grid numbered indicators on the chart? That's what they are, exhaustion signals, exhaustions. You know, buyers are exhausted, sellers are exhausted. So again, I don't want to get too wrapped up into DeMark, because DeMark is not my cup of tea. I'm not, you know what I mean? I just look at it. I don't even use it. I look at it as a reference in addition to what, the stuff I got confidence in throughout my career is sweeper activity and sentiment. And there's nothing else, guys. I'm sorry. All right. I've been in the game, what now? 20 something years. I've tried it all. I've looked at it all. And haven't found success utilizing anything else. And I tell you guys why. Okay. And not many people, especially that run some sort of service, are going to be honest and tell you that. I am not that good of a trader. It's that simple. And I gave up on trying to be some great trader a long time ago because I know the odds are against me. That may sound pikerish, but that's what turned around my career. Otherwise, I probably am not in this game right now talking to you guys. There's a reason why you hear that saying 95% of traders fail. There's a reason. It's not easy. It's not easy. So, you know what I mean? I gave up on trying to rely on my trader skills a long, long time ago and started to focus on things that would keep me disciplined, get me to do the things I needed to do to be successful. And again, sweeper activity, flow in general, flow and sentiment have been the only two things that I ever discovered. Yeah, and DK screaming at the top of his lungs, individual indicators, they don't work. It's not that easy, guys. You know what I mean? It's not that easy. It's not that easy that all you're going to do is see a 9, and every time you see it, you buy. Every time you see this, you sell, and you're going to make money and live happily ever after. You know what I mean? You're chasing unicorns. You're chasing unicorns. So all this stuff, if any indicator out there, and I'm sure DK, you would agree, you're using it as a reference with something else you have confidence in. It's rarely the indicator that you have confidence in. Right, exactly. Only as that. Exactly right. So that's why even I hate putting these things on my screen, because people think like I got some magic indicator out there. There's no such thing. There's no such thing. Dave is asking, can you share generally how you approach a name that has repeat sweepers? Yeah, Dave, for me, it's simple. But again, this is more me. I've seen others use that action differently. I look at repeat sweeper activity. If I'm in the name, that may get me to lengthen the leash, hold it a bit more than I would without seeing repeat sweeper activity. But I don't play. If you're talking about repeat sweepers at higher levels, I don't play. You know what I mean? Now, again, if you're asking about repeat sweepers in a name that hasn't moved yet, that's a different story. That's extremely bullish. Like, for example, we didn't even talk about flow yet, but honestly, I like this conversation we're having better because I think it's more important. But EPC, okay, this name last week, nobody, I don't know what the hell they are, some healthcare name or whatever the case may be, continues to catch action throughout the week. The stock is not really doing much. Finally popped on Friday. If this thing didn't have earnings, I would have a decent sized position in this. So Oh, and the name that hasn't moved, it's extremely bullish. It's extremely bullish. Okay, extremely bullish. Because think about it, Dave. It's telling you that that player, regardless of what the stock is doing, has a lot of confidence in the play. Okay, and not only that, the more action you see come into a name over the course of days or weeks, the more it tells you that it's probably a legitimate play, rather opposed to just one block that could mean anything. Yeah, like, Disney wasn't an easy trade by no means, but if you guys remember, Disney had some nice sweeper activity, before this move. Now, up here, we're still seeing call activity. I don't trade off that personally. You know what I mean? If I'm in the name, I might hold it a little bit longer, but I'm not climbing up the ladder, as they say, and buying Disney up here when the action was coming in down there. Yeah, and that's, it's FOMO, it's momentum players, just piling in. The real guys are the guys early. And here's another thing to keep in mind, Dave. The real action, the real deal action almost always comes in when you and me really don't want to buy the name. I'm being honest with you. The real deal action, the initial activity, usually comes at the spot where we're not excited, probably want nothing to do with the name. Like Disney, everybody's talking about it now. When it was seeing that initial activity, I gotta admit, a couple of us did trade it in the room, but you had to pull teeth. You had to really pull some teeth. Yeah, there's a perfect example. PAGs. Like, why? Who the hell wants to touch this thing, right? Or Campbell Soup, when that action. You're gonna buy this thing, Campbell Soup, down here. They're buying, no reaction, buying, lower, buying, ignoring it. Yeah, and it's because the guys who are doing the buying have access to a lot more information than you and I do. You know what I mean? They're not trading on emotion. They have a lot more. They have access to a lot more information than we do. They're professionals. There's a reason why it makes news when a third point is building a position in a PayPal. Remember PayPal when they bought it? Okay, PayPal, it was right off the Amazon news. Amazon was going to put them out of business. I don't know if you guys remember that headline. But when the PayPal action came in and we were talking about it, I remember guys on the Saturday webinar telling me, oh, yeah, but that Amazon news, that's not good. It's always like that, always. And that literally, came right into these lows here, right into these lows. Yeah, so it's just, and that's, yeah, exactly, DK, and that's exactly, guys, what I was talking about just now in a prior conversation. I gave up on trying to be those guys. Like, when you get into this game, you want to be those guys, right? You don't want to sound like a piker, but you want to be those guys. I want to be my own guy. I can be this superstar trader. Forget Tepper. I can be Tepper. I just need some time. And then, as I matured, it just started to dawn on me like, all right, listen, the odds of me being some rock star trader are against me. And I'm a big odds guy. I have a gambling background. It's a whole odds and probability to me, everything. So I want to put my money. I feel like, again, I'm not a trader. I'm a professional gambler. This is gambling. And I do it professionally. That's all. So I want to put my money next to where these guys are, right? That's basically what I'm trying to do. They're not going to be right all the time, but more than not, they're going to be right. They're going to have a hell of a lot more winners than losers. And when you're gambling, it's all about managing your risk. That's it. So if you have more winners than losers, net, you made a profit. That's what it comes down to. Sean's asking, how do you determine whether to day trade or swing trade an initial large sweep? That's a good question, Sean. I guess it depends. For me personally, again, I think that's what you're asking. It depends on a couple things. Okay. If we get a green squeezometer, Sean, and there's a missile that comes into XYZ, I'm probably going to take it for a trade. You know what I mean? I got sentiment on my side, and I'm looking for a long. So if sentiment's on the other side, I'm probably going to pass. So again, that's where sentiment comes into play. But for me personally, the day trading, swing trading, if you guys remember, those of you who know me for the years I'm on Twitter, I stopped swing trading, if you guys remember, for a long time. You guys remember that? I was just solely day trading. I'm talking about a couple of years. I stopped swing trading. And then what happened was, post the Trump election, I started to see flow that I just wasn't seeing. We started to see missiles again. There was a good period of time before that election where the flow was just abysmal. It was awful. There were no missiles. Those big, huge, aggressive sweeps. There was nothing like that. It really stopped and I stopped day trading. I stopped swing trading for like a couple of years. And then post-election, we started to see the flow explode. Missiles all over the place in names that I never even knew could catch that type of action. And then I started swing trading again. So, but I try to be as selective as possible on the swing trade end, and the majority of stuff, I like to have a decent amount of time behind. You know what I mean? So I found that happy medium. The short-term stuff, I'm okay day trading, and some of the longer-term stuff, I'm willing to swing trade. So, and you can look at the names that I've owned swing trading. I've owned the PayPal that was a couple months out. Pags, I'm in Pags. Campbell Soup, I was in, right? All stuff that had a decent amount of time behind it. FDC, I'm holding on to Jans. Some, not a full position. So all with time behind it, for the most part. Okay, once in a blue moon, I may hold overnight for a swing, something short dated. But for the most part, that's my goal. Napur saying SPY has very low volume. Doesn't mean anything. Yeah, it means everybody is in the Hamptons. That's what it means. We're in the summer, Napur. Low volume and the summer go hand in hand, man. And listen, here's what I have to say about the volume crap. You're not an institution. Okay? Again, these are the players out there you see on social media that try to talk a big game like they're big players. Oh, I'm not trading on a summer Friday. You know what I mean? You hear those same lines over and over. Volume to us means nothing. Means nothing. Okay? Do you have liquidity? The reason that comes about, okay, the big boys use that as an excuse because they have no volume to sell into. If something is thin and they want to unload some SPY, they're going to kill it because there's no volume. Okay, if you're trading Facebook on a summer Wednesday, the volume means nothing to you. There's more than enough volume there. Okay, and the other thing to keep in mind is that you get a little more movement on low volume. That could even be a better thing than a bad thing for you if you're a trader. So don't get hung up on the volume. I've seen markets rage, full-blown bull markets rage. And riffraff out there say, it's rallying on low volume. And they missed bull markets, okay? And they missed complete bull markets because they kept saying the rally had no volume. Can I just make another point too? What I've realized in my career, like I get it. Okay, you want to see buying come in, you want to see higher volume, but for me, it's the total opposite when that has worked for me. When they're selling and there's volume, that's usually capitulative, right? It's capitulation. That usually marks a bottom. When there's buying and the Dow is up 500 and there's huge volume, that's usually euphoric. So it works the other way a lot of times. So I wouldn't get wrapped up into it. I wouldn't, I get what you're trying to look at there, Nipur. So don't get me wrong. I'm not picking on you. I say don't put too much emphasis in that. There's no trading signal out of that. I've seen bull markets go crazy for lengthy periods of time on low volume. What else we got? I'm trying to scroll back here because I go in chronological order and I skip over people accidentally, the questions. So I'm trying to go back and see if anybody has any questions that I accidentally skipped over. Throw them out there if you can again, because me scrolling back, I get into trouble here pressing buttons. You don't want me pressing buttons with technology. You know what I mean? You don't want me doing that. Riffraff. All right, so let me just go into the flow while I screwed up the questions here, and I apologize. Yes, here's a couple interesting tidbits I wanted to throw out to you guys. Good call, Michael. Interesting things. On late last week, we started to see a UVXY. We call them dollar bill. Okay, that's the nickname we gave them. There was a little write-up on them in Bloomberg, blah, blah, blah. In English, it's a guy who goes out there, he plays around with dollar strikes out with some time on the call side, okay? He started doing this in November. Market continued higher. He would trade in, he would trade out, trade in, trade out. And we would continuously see him. And then February, if you remember, the market took a dive, VIX exploded, and I read an article, Bloomberg, how this guy cleaned up off that bet. Okay, so we're seeing him circulate here. We've been seeing him last week. We saw him on and off a couple of times. So we've been seeing his face on the call side again. Interesting, right? With UVXY down here. And then Friday, you probably heard about this guy more than the other guy, 50 Cent. There's a guy in VIX who they nicknamed 50 Cent. He buys 50 cent lotto calls in size. Okay. And same thing. He got lucky, caught the explosion in volatility in February. He popped up Friday. So these guys are around. And does it mean the market blows up tomorrow? No. Because like I said, I told you guys, the UVXY guy was definitely around mid-November. Around there, we started to see him really pop up a lot. And think about that. You had December, and then you had that January move before the market imploded. Okay. And the VIX guy, from what I read, is very similar. These guys fool around. They poke around when volatility is down here. They know they're likely going to be early, but if they catch something like this, they may even get something bigger. God knows. They're going to make a score. Okay, so lottos. You know what I mean? That's what they are. They're lottos. But here's why, they're interesting, even though they're lottos, because you're not buying VIX while it's up at 40 and everyone's panicking. You're buying it down there when nobody wants it. You know, to me, that makes more sense for a lotto, right? You never see players do that. You always see the retail crowd chase highs for a lotto, chase a move for a lotto. You never see them buy blood for a lotto. So that's interesting. Let me get the bet here. I can show you guys what the hell he did. The VIX guy. Come on. What a pain in the neck. I tell you, this Twitter search drives me nuts. Some days it works. Some days it doesn't. Some days you got to put at behind the handle. Sometimes you don't. This is so annoying, man. I got Steam Room spelled wrong? Oh. What a nut I am, huh? What would I do without you guys? You know how many times I've done that too? And you guys scream at me? Oh my God. Here it is. I'm cursing out Twitter. Meanwhile, I'm the moron. Here's the thing. All right. So 50 Cent is back in VIX, dollar bill circulating in UVXY. Here's the VIX bet. Where is Tomb? The Steam Tomb. All right, so there's September 19th, so he's got a little bit of time. $30 calls, and you see the premium? That's what he does. That's his game. That's why they call him 50 cents. 50 cent premium. That's what he plays around with. Lotto fever, baby. So we found that interesting, right? You know, the problem is it actionable? You know, only if you're going to take a shot with some lottos and do something similar, you know, but timing wise, it's tough. The UVXY guy, I remember like pre-election, he was around and he was well timed back then. You know what I mean? It was only like a couple of days, then the market took a bath. But recently it was a couple months, so it's tough to get a timing idea out of it. Because think about it, the UVXY guy's fooling around like Jans. This guy's buying September 19th. You know? No, these guys, William, these guys aren't hedging. They're known. They're known players. They do this a lot. These are the same guys. Again, you know, 50 Cent is this guy's nickname. I think Bloomberg had a little write-up on him on Friday too. I think somebody was telling me. And like I said, the UVXY guy, yeah, people, we joke around Gunlock. We really don't know who it is, but these are guys that have been around, you know? Yeah, that's that, and that's why I think these guys, yeah, they're professionals. They know what the hell they're doing. Like I said, they're buying, like you said, Paul, one little, if VIX just gets a little bit going here, and they're going to make some decent money, right? One little wash, and they're going to be in good shape. But they like to poke around. It's not just one order. They don't just play this. You know what I mean? He'll like trade these and then go out a little bit further. You know what I mean? They're active. They're not just, okay, I'm gonna buy one lotto and leave it alone. When you get a chance, Google them on Bloomberg. Bloomberg had a write-up on these guys. You'll definitely find this guy. There's been a couple articles online. Google VIX 50 Cent player, Bloomberg, and you'll get some write-ups. It's interesting. It's definitely interesting if you're laying on the beach this weekend and you're interested in this stuff. All right, so again, I wouldn't get too cautious. You know, this is just another example, guys. Okay, we see that, and it's interesting, right? It makes you wonder what the hell these guys are up to. But for me, it comes down to two things, right? That sentiment, and especially once the flow clears up post earnings, It's going to tell me everything. It's going to tell me everything. If we're selling off and this board is lighting up green with lightning bolts here, I couldn't care what 50 Cent is buying. I'm getting long. You know what I mean? So that's what it all comes down to for me. I wanted to just go over, this is how bad, this is the Daily Sentiment Index. I post this on Twitter, my regular Twitter a lot. This was Thursday's close. So pretty much around there. You can see the VIX here. So red meaning people are too bearish. Look at that, single digits on the 5 DMA. Here's a great example, right? You see this? The dollar, right? 92. And we were talking about this early in the week, okay? And me, even myself, we were talking, we're like, how is this dollar going to go down? Like, there's nothing, no bearish case you can make about the dollar right now with what's going on in China, the devaluing and everything else. How? I mean, there's extreme bullish sentiment. Everybody's all in. I mean, what's going to take the dollar down? And lo and behold, Trump. You believe it? Is that amazing? That's why I'm fascinated by this shit. I'm serious. That's why I'm fascinated by it. So all these bulls that were all in, especially the riffraff chasing highs in the currency markets, they got hit over the backside of the head from something they never were expecting. Now, gold needs the miracle. Look at gold. And you got, cause of the currencies, you got commodities. I don't fool around with them, but you got a lot of commodities. Hot OJ, orange juice, the only one where bulls are leaning too hard. But I'll post the updated one, the Friday one on my Twitter. Here's the action off Friday, just to give you guys an idea of how I'm struggling a little bit with the action here. There hasn't been anything I'm getting excited about, which is good because we were hot sentiment-wise, but I'm hoping shit clears up. Excuse my French. EPC, this is the only name that's piqued my interest, okay? They have earnings in August. All right, so even that one you have to take with a grain of salt. But this is a name, they bought over 12,000 of these August calls in a matter of 3 days. Could it be an earnings play? Of course. That's the issue, okay? But that's how aggressive they've been. 12,000 in small little lots like this, guys. I like that. If this, I hate to say it, but I always say, if this didn't have earnings, I would definitely be in a decent position for a swing. Definitely. So we were talking about in the room, the only way to play this is, you put some money in it, your stop loss is 0. You could even hold that through earnings if you want, because again, your stop loss is 0, or you're looking for that move on a run up prior to earnings. We were discussing that. I mean, is this type of name worth it? Can you see that big of a move? It's a slow mover. It's a slow mover, really slow. So this is the tough part. This is the times I get frustrated on stuff like this. I love this action. What the hell am I going to do, So let me go back to the screen here. All right, so EPC, keep an eye on it, if anything. Worst comes to worst. CRC, a lot of you guys know that name. By far the biggest winner out of energy sweepers. Last year, they were buying this thing as low as, I think, single digits, aggressively buying it around $12. It exploded. Every dip, sweepers have come back to buy. Every dip since. And this dip, they come back to buy as well. What's the problem? Who knows what the issue is? You guys know the issue. You got earnings. What happened here? I got stuck. That's it. This freaking thing. You got earnings. What happened? Whatever the case. It's on a nice little pullback. You got some earnings. That's the problem with it. You guys hear me okay right now? Or is it just my charts that got screwed up here? Oops. I think it's just my charts, right? Hold on. Just chart? All right, good. You can hear me? No, I thought I lost you guys too. All right, so CRC, I would keep an eye on it post earnings, without a doubt. If you don't get that big of a reaction, you get, a little weakness or a non-event, and they come back for it. You got a nice dip. I would show you on the chart here. I don't know what the hell is going on here. It's just not going to pull up the symbol for me. Anyway, anywho, you can keep an eye on that off earnings. And then BSX, again, earnings play, a bull risk reversal here. They sell these puts. They buy calls, $35 calls with it. It looked like they closed some July positions that expired. So it looks like a roll, but this was the best of the action, guys, Friday. This was the best. All right. In my opinion, at the end of the day, I post the top activity, the top orders out there at the end of the day, in my opinion. Maybe more initial activity, stuff that are lined up for trades. Some days there's just not much action out there. I try to find the best orders out there, and these were the best Friday. On that note, anybody have any names they want to share with the crowd today? Yeah, NXPI, Sean, has been catching size action, both puts and calls, for a long time now, since the announcement of that potential merger. So what we have been realizing, though, off pullbacks, they seem to be buying calls every time this thing pulls back. And then you get some sort of positive headline and the stock pops. There's been a guy in the room who's actually been trading it in a small way, but been trading it that way. But it's nothing new. There's been size activity there. I'm sure, there's arbitrage play with the stock and that stuff. So it's nothing really that clean. But I noticed a lot more call activity off pullbacks in that thing. Tim is a TRN. Yeah, that's a good looking name. Now the chart comes up. Look at this. Here's the CRC, by the way. You got a little pullback. And literally every pullback they bought. What a winner this thing is. What a winner. Yeah, this TRN, Tim, is interesting because I've seen action in this name before, and they've done well. Has been a slower mover. They do have earnings, though. Keep in mind, they do have earnings. I think this is a railroad name. Is it? Isn't this a railroad name? I could be wrong now. We saw some activity in CSX pre-earnings that really had a nice reaction. Another rail. The rails have been hot, man. NSC. They've all been hot. Provides various products, services to the energy, chemical, transportation, agriculture sector of the United States. I think it's a rail play, TRN. I could be wrong. It is? It is. All right. So yeah, I mean, Tim, decent action, strong name, but you got earnings in the mix too, and you got a big move there. They build rail cars. Okay, so in that group. Gotcha. Thank you, Maria. What other names? Let's see here. VKTX. I remember that name. A little bio name. We're seeing some action out in January that I remember. VKTX. All right, so we've been seeing some smaller spec action in some cheap bios. Some of them have been on fire. I guess that's why we have this, right? I guess bio, it kind of snuck up on me. Bio's hotter than I thought. I guess that's why we have biotech a little too hot on the sentiment front. There's been some strong bio names. But we've been seeing some action here and there in biotech. Again, they catch earnings, so you gotta take it with a grain of salt. Yeah, ABBV caught a late day sweep, a ton of put activity off the Citron. Wasn't it Citron? I think it was. So I would like to see a little more action come in there. That one sweep is kind of like a heads up. Maybe they come and buy this blood here off the Citron. So, worth maybe a peek. I don't know when they have earnings. Oh, earnings coming up here. Everything's got earnings, man. You got earnings coming up there too. Yeah, ISRG had a really nice bet, but that has earnings too, I think. ISRG. Oh, they had earnings. Yeah, there's earnings all over the place, guys. That's my point. That's why, what do you think, you guys? You think I don't like the action you guys are talking about? It's just names, the names you're mentioning now, they always catch size around earnings. Always. The reason why I put these names on here, EPC, I've never seen in my life catch this type of action. CRC, they bought every single dip in the energy name. I know a lot of you guys look at that name, so something to keep an eye on more post earnings. And BSX was a risk reversal, which, these things have been money, these bull riskies. They have been money. There were a couple bull riskies recently that really panned out nicely. ARNC, they bought the lows there. Nice risk reversal. I got a big pop for that name. And this one had earnings. There was a real nice risk reversal in this one, GPC, but it popped a little bit off earnings here, see? Yeah, Skechers, again, it's just earnings flow, Paul. I think it's earnings flow. Like I said, you could trade them on the run up into this. How do we know, Paul, that it's not somebody who short Skechers from up here buying calls to hedge earnings weakness? You know what I mean? And listen, the reason why we make that remark is because it's the probability or the odds of that type of activity, shorts hedging their positions, go up dramatically during earnings season. That's why you see names catch activity that never catch action before. You know what I mean? You look at the names catching call activity out there and size, these things a lot of them never seen action like this in their life before. Never. It's funny, Mike, you guys know Mike in the room. I was cracking up because it's so true. He's like, oh, HPE flow. Guy, must be earnings season. Every earnings season. I don't even care if they're reporting. Every earnings season, HPE sees activity. It never sees it outside of that. Never. You know what I mean? So that's why. What do you think? You think I don't want this action to be real? I mean, come on, you know that. There's a reason I keep pushing the narrative. It's earnings flow. Be careful. Blah 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 blah. We don't know Skechers was ahead. We have no idea. Now, in hindsight, it's easy to say, "Oh yeah, it's a hedge." We don't know. If we knew it was a hedge, we'd be shorting. No, we have no idea. No idea. But because it's so cloudy, because we can't be as confident. That's why we have to treat every action, all the action, the same way. And it's very simple. These bets mean nothing for earnings. They can create momentum. Skechers had momentum. See, that's what you guys are looking at the Skechers flow and saying, oh yeah, does that? I'm looking at it as you could have got a trade out of that into earnings. That's how I look at it, because that's how I would look at all these things. Even when these things run off earnings, you don't hear me pumping a wise guy activity chest and saying, oh yeah, you saw that earnings flow, because it does me no good. And the other thing too, guys, I know the smart money out there from watching Flow enough. I know that they're not making a $3 million bet on so-and-so into earnings in big size. They don't do that. They don't. And you see a lot of the action, you'll find out, like, I'll give you an example. There was a couple names last week. Starbucks, another name around earnings, always catches action. But you'll see, like, oh, shoot, August 3rd, call sweepers. Wow, that's big action there. And then you'll look at earnings, August 2nd, to the day. You know what I mean? Right to the day. Right to the day. And honestly, if they were really buying and betting on the name and they wanted to take advantage of earnings, they wouldn't buy on strikes to the day of earnings. They would go out to February and say, you know what? I'm going to start buying some longer term stuff here. And if I get weakness off earnings, I'll come back and buy it again. That's how they would bet on earnings. They wouldn't do it like that. This is spec action into earnings, could be hedging, could be spec, could be anything. We have no idea unless you know these guys personally. That applies to it all. That applies to it all. The one bet, okay, me personally, I wouldn't play any earnings action, but you guys play it anyway, right? You guys are going to play earnings no matter what I say. So if you're looking for earnings flow and you want the probability of it being legit or successful, look for the risk reversals. Why? If it's not tied to stock, that's the biggest issue there. Could replace an equity position. But if it's not tied to stock, when they're selling puts, that's obviously a lot more confident, right? That's obviously a lot more confident. So like the GPC, you know what I mean? There's BSX. If you're going to use any sort of activity for earnings, the other stuff, just if you're looking to trade it, trade the momentum on the run up. Sometimes you'll get it. Sometimes you won't. That's the way the cookie crumbles during earnings season. But that's what I'm saying. You're going to play anyway. That's the proper way to play off flow during earnings season. Yeah, DK, there's nothing wrong with it. I got a couple of guys that are in this game longer than I am that play earnings. But you know what they do? They play really small, like they're gambling on a ball game. Okay? They put in what they're willing to lose. And here's the most important part, DK. They don't, and I'm not singling anybody out, but they don't bitch and complain when they lose their money. It's expected. You understand? They're not scratching their head like, wow, these Skechers, call buyers, what's wrong with them? God, were they wrong? You know what I mean? And bitter because they lost money on earnings. They're prepared to lose money on earnings. And, they're just looking to win more than they lose. And I'll tell you this much, okay? If you guys out there, I kid you not, if you played every single one of these plays, even like Skechers, that catches decent action, whether they're hedging a short or not, and you money manage properly, okay, you put in the same amount behind each and every idea and you play them all, which is not realistic, so I'm kind of wasting my breath, you would come out of earnings season profitable. I swear to you, you would come out of earnings season profitable. But you're not going to do that. You're going to pick and choose which ones you like. So now you're not only relying on earnings flow, you're relying on you. That's not a solid exacta right there, in my opinion. You know, again, I told you, anytime I feel like I'm relying on myself, I'm a dead man. I'm a dead man. Because if you like Apple into earnings, if you're seeing Apple flow into earnings, that means every jabroni out there likes Apple into earnings. Makes sense, right? So that means you and the rest of the jabronis out there who are long Apple are all going to high five after earnings. Yeah, I'm not going to take that bet. You know, that's the logic behind it. Again, you may not want to swallow that pill. You may not want to believe it, but that's the way the game works, man. It's no coincidence. You know, like Bitcoin. Yeah, everybody, I get the Bitcoin riffraff, you know, cursing me out, you old man, blah, blah, blah. I don't know the first thing about Bitcoin. I'm not going to make stupid remarks about Bitcoin. It's not the future. It's this, it's that. All I know, okay, all my point I was trying to make is that every riffraff and their mother's sister's uncle wanted to buy Bitcoin into this run higher. Okay, so if this was going to 50,000 plus, that means all that riffraff, the whole Twitter world, everybody watching CNBC, everybody I know that doesn't have two nickels to rub together that put all their money in Bitcoin, they're all going to get rich. They're all going to get rich, and I'm going to miss the boat completely. So the whole population is going to become multimillionaires. You know what I mean? It's logic, man. It's just logic. That's the way this game works. It's not a coincidence. Yeah, that's what it is, Paul. The smart money, all the smart guys that you see pumping Bitcoin, okay, talking about how great it was going to be, they're all in down here. It's like a Ponzi scheme. It's like a pink sheep pump and dump. They're all in down here. They're all in down here. They load it up, and guess who they're selling to while this thing, guess who they're unloading to as this thing is going parabolic? They need sellers. They need buyers. They need to sell to somebody. If the public is not buying, who are they going to sell their Bitcoin to? Themselves? So you got an unregulated, I don't know what the hell it is, some cryptocurrency coin where you're lucky your account doesn't get hacked and robbed, let alone blown up on the price action. I mean, come on, you know? Sometimes you got to apply logic. You just got to apply some logic. You don't have to be that intelligent. You don't have to be that intelligent. You know, I'm not kidding. You go on Twitter and you look around and see what the hell they're talking about. Okay, and they're all bullish Netflix into numbers. The probability of Netflix having a huge quarter and them all making a score is very, very small, very small. Is it possible? Of course, but the odds aren't with you. I'll tell you that much. The odds aren't with you. You know, that applies to everything. Right. And the secret sauce is to buy when they're all getting shaken out. I got that chart I post on Twitter sometimes. I don't know if you guys seen it. It's great. It's it's like I use it in my Twitter background. It's a chart that goes up, down, and then a big move up, and then the next move down, you have bodies falling out of it. Did you ever see that chart I posted? It's classic. It's classic. But that's, it's just, again, there's buyers and sellers, and this is the way the market works, man. Yeah, honestly, DK, more and more people, more and more algos out there are using that, because Twitter has gotten so big, sentiment there's obviously some value out of the sentiment there. You know what I mean? The problem with it, DK, that I found, and why I look at it, you know what I mean? But I don't look at it as religiously as I do the options market, because you don't know if they really own this shit, right? They could say I'm bullish, I own so-and-so, but these pikers may not own a share of it. They could be talking out of their rear end. So you don't get that true value out of it on the sentiment front. Like if the squeezometer is showing you that the riffraff is bearish, that means in the option market, they're putting their money where their mouth is. They're not saying, oh, this market is going to fall apart. They're betting the market is going to fall apart. That's the value out of this stuff. That's the value out of this stuff. All right, any other last names before we wrap it up here? But honestly, I feel that this webinar, all kidding aside, I like these type of webinars better anyway, rather than talking about names when we're in earnings season, all that blah, blah, blah. The strategy, the sentiment front, I think is so important. It's so important. You know what I mean? Like sweeper activity, all that stuff, it's an idea generator, just like anything else you probably use. I just think there's a bigger edge off of it because obviously it's wise guy money. But if you don't understand, the simple basics of how sentiment and emotion evolves around this market, you're going to have a tough time. You know what I mean? The simplest stuff, the simple stuff that up here, no matter how bullish things look, no matter how bullish everybody is around you, you may not see a reason why the market's going to go down. The fact to know that something like this is going to be on the way is a huge edge over everybody else out there. Huge. Huge. Yeah, it's simple. DK, you're 100% right. It's simple, but it's not chasing unicorns. It's really what moves markets. You know what I mean? It's the truth about what moves markets. It's not like something's trading above an Ichimoku cloud, so it should go higher. You know what I mean? It's real players, real money at work, what's really happening in the market. And I guess, I was so drawn to it because, like I tell you guys, I'm from a gambling background, and it's in real way. Okay, it works the same way. When smart money comes in on one team in Vegas, Vegas doesn't eat that bet. They move the line, they push that bet out, and they try to get riffraff money on the other side. It's the same exact thing. Same exact thing. Or when everybody loves the Giants, on Sunday, the Lions pick them. Everybody thinks they should be favored by a touchdown at least. That Vegas is crazy. Right? And the Giants aren't winning or covering that game. You know it. It was the same exact, it's the same, right. And it's not that the house always wins, because that's a little misleading. They lose sometimes, but net, big picture, the house always wins. Always wins. Always wins. Right? You could win a couple of hands of blackjack. You could sit down for a couple hours, be profitable in blackjack. The longer you sit there, the longer, the money is going to go right to the house. They're going to get it all back. And Paul, you make the best point. The wife always wins. The wife always wins. There's no doubt about it. Wifey always wins. I think We already acknowledge that. You see how easy we acknowledge that? We give that up because we know there's no point in even trying to fight it because it could create bigger issues. No matter what, whether you're right or wrong based on fact, wifey always wins. You're 100% right. You're 100% right. All right, guys. I'm going to go now, lay on the beach, cup of coffee. I got some reading material here. I got, you know what, I subscribe to? I like to look at the Stocks and Commodities magazine. You guys ever look at that? I like to relax on the beach reading that. And then I got the IBD Weekly, take a look at. And by the time I'm done sifting through that nonsense, I get a little jittery. I can't sit down anymore at the beach. So, all right. But I appreciate you guys stopping by. Anybody who's new, you could go to wallstreetjesus.com. It's just like my handle on Twitter, not street the word. And go to strategy right here, the strategy tab. Okay. Even if you're new members, you'll find a lot of information here that'll help you out. It's a lot of basic information, sweeps, wise guy activity, how to use it, how others have used it, etc. And a lot of the more general questions, I think you'll find the answers here. Also, very quickly, I always forget and then get questions at the end. We got 3-day trial, no credit card required. All right, so you get 3 free days in the room to get an idea of what the hell we're looking at, and then 50% off the first month. And then if you're interested in just private Twitter, go to the products tab and click private Twitter. And for $59.99, you get access to private Twitter. Just throw your handle in there and it'll guide you. All right. Yeah, no, not you could get it off the wall. You could get it off the St. Lucci site to sign up, or it'll guide you right here to the Wall Street Jesus site. All right. If you have any questions, let me know on Twitter. Guys, thanks for stopping by. I'm serious. I always enjoy it. Enjoy the weekend. Should be a fun week next week. Good luck.